Oh, snaps. Hey, everyone. Happy. Oh, it's technically Saturday. Okay, so welcome. I want to talk about the main differences between an IRA and an IRA Roth. Someone had recently asked about this, and I want to give some pointers about the differences between the IRA and the IRA Roth. So let's talk about what the IRA Roth is. The IRA stands for the Individual Retirement Account. Again, the IRA stands for the Individual Retirement Account. And the main difference is like between the IRA and the Roth IRA is when they get taxed and how they are taxed. So I'll talk about it. The traditional IRA contributions are tax deductible. So a lot of times if you're on a 401k or if you have an IRA, what happens is that you're able to put money in an IRA. And once you're able to put money in an IRA, then it is tax deductible. The reason why it's tax deductible now is because you won't get taxed on it now, but you get taxed on it in the future. And so getting taxed on it in the future, they well, what can I say? They predict that what you're making later is going to be less than what you're making now. So right now you're working, you have a good, job or whatnot. They're suggesting that later when you get 62 to 65, right, that you're going to be making less income. And so they're assuming that you're going to be on a lower tax bracket. So that's why that when you have to take required minimum distributions at 65, 62, or any of those ages, right? Whatever they feel like making it, right? That they're going to tax you. So that's what an IRA Roth is. And so, how do you open one up? You can talk to a financial advisor, or you can go to a bank that have different options there where you can open up an IRA account and actually start putting money in there. And so, again, the main difference is that you're able to get a tax deduction on the money you contribute to the IRA because you'll get taxed later. So just think about that. You'll get taxed later. Um, it grows tax deferred. So, meaning you won't pay taxes until you withdraw it in retirement. When you do withdraw the money, you'll pay taxes on the amount you withdraw as if it were ordinary income. So, that's the IRA, the traditional IRA, the individual retirement account. With the Roth IRA is contributions are not tax deductible. So, meaning if you work a W-2 job and you want to open up a Roth IRA account, you do it with after tax money. That means you don't get a deduction now. But the sweet thing about it is that the money grows not tax deferred, because tax deferred means you don't get taxed on it right now. It's deferred. However, in a Roth IRA, you get it grows tax free. So that means that you won't pay taxes on the earnings on the account, and you won't pay taxes on the money you withdraw in retirement. So the sweet thing about it is the fact that um, you won't have to pay taxes on it later. So it will grow tax free. Now, there's some different avenues, such as the backdoor Roth IRA, different things like that, that are more advanced, but those are the two basic ones. If anything, I would say open up a Roth IRA account, because in the future, when you are having that distributions, the cool thing about it is that you won't have to worry about the taxes. You could be a millionaire when you're like 70, 60, 70 years old, right? So you want to make sure that it is tax free, right? But there are some income stipulations. They didn't point that out here, but I'm pointing out the income stipulations, meaning that you have to be under a certain tax bracket in order for you to take advantage of the Roth IRA account. So another key difference is that there are no required minimum distributions with the Roth IRA. Whereas the traditional IRA, you must start taking required minimum distributions when you hit 72. I said 62. I was like, yo, you got to start taking I mean, it sounds nice, but 72, it is the minimum with a traditional IRA. So um, I will say that if you don't have your job that is matching the amount that you're putting into retirement, then you want to look at different options, the Roth IRA and the IRA. Especially when you're younger, I would say go ahead and open up a Roth IRA account because, I mean, like, especially when you don't have a lot of expenses, it just makes sense to do it because when you get older, you won't have to worry about it being taxed. Um, when if like you won't have to worry about it being taxed. And so when you're younger, typically you may be living with your parents or not living with your parents. That's when your expense are the lowest, especially if you're single, right? Just easy. Yes, thank you so much. Yes. Appreciate it, appreciate it. So those are the key differences. Again, um look at investing on your job, especially if they're matching. So if you put 3% of your paycheck into a 401k or a 403b, then if your job is matching it, that's good money, that's free money. So go ahead and do that. So anyways, other than that, the IRA and the IRA Roth, I would start with the IRA Roth. And then as your income grows and grows and grows, if you're at a whole nother tax bracket, look at the IRA. So all right, guys, you guys have a blessed one, and God bless.